Stocks up across the board as investors cling to hope that more stimulus measures are ahead for China. For analysis, let's bring in Craig Erlam, a senior market analyst at Oanda. All right, Craig, another update for stocks in China despite disappointing export data on Tuesday. Now, it's Ministry of Finance saying it will throw more money towards infrastructure projects. What's next for China? More stimulus?
Well, I think that's all they've really got in the toolkit at the moment. We've got the central bank, which is cutting interest rates right, left and centre. Now we've got the government who's implementing this fiscal stimulus, and I think that's going to be key now for the rest of this year. It's very important now that the government and the central bank work together to regain investor confidence, really. And you can see that that's really been shot over the last month or so. We've seen massive declines in the stock market, and that's just simply because investors just don't have the confidence in China that they once had. People are questioning their growth figures, questioning the trade data, and really what the authorities now need to do is regain our trust.
And there's talk now that Chinese officials will change their GDP calculations. But I want to ask you about a note from Citigroup that just came out saying that there's a 55% chance of a global recession, largely on the heels of what we're seeing in emerging markets, particularly China. What do you make of that?
Well, I don't think that's necessarily a massive shock. We've just gone through an enormous financial crisis, global financial crisis. There was always going to be ramifications for this, and I think this is the reason why central banks are so keen to return to normalisation. If we enter another global recession in the next 12 to 18 months and interest rates are at record lows and we've got all this quantitative easing in the markets, the central banks don't really have much left in their arsenal in order to create an easier environment for the markets, for the economy. So I think that's reason why it's so important. I do think really when you go through such a long period of easy monetary policy and low interest rates, you are, and I think a lot of people are in agreement here, you are really just sowing the seeds for future financial crises.
So you think the Federal Reserve should raise interest rates in September despite the weakness in China and the volatility we've been seeing? Because we just had the World Bank chief economist tell the Financial Times that the Fed should delay its rate hike.
Absolutely. I mean, there's differing views everywhere you look, and I think really what we're seeing at the moment in the US has got to look at its own economy as well as external. The US, the economic growth there, it's not fantastic, but it's not bad by any stretch of the imagination. Unemployment is 5.1% now, extremely low. Yes, inflation, as measured by their personal their preferred measure, is still quite low, but from January to this point this year, as the Fed's member Jeffrey Lacker pointed out recently, is actually over 2%. So it's actually above target when measured on this year alone as an annualised figure. So really, the figures in the US aren't really that bad, and really, we can't look too much out at the emerging markets here alone.
Yeah, we'll find out. Of course, the Fed's September meeting is next week. Where are you putting money to work right now? What stocks are on your radar?
Well, I think the most interesting stock today has got to be Apple. We've got the launch of a new iPhone, potentially a new iPad as well, Apple TV. And this is the one that's really interesting most investors today. We do tend to see a lot of excitement around these launches, maybe not as much as previously. They're not quite the innovators they once were. But there's still a lot of interest in the Apple stock. Now, we've seen a big correction in the stock, as we've seen in the entire tech industry over the past couple of months. So that may be seen as an opportunity for investors, especially if they get excited about any releases.
All right, Craig, we'll leave it there. Craig Erlam, a senior market analyst with Oanda. Thanks very much for joining us. I'm Scott Gamm, and you're watching The Street.